Hey guys, it's Sergey from DeFi Gator, and today we're going to talk about Aalto Protocol. And before we start, and if you don't know too much about us, check out our content on defigator.xyz. We got a ton of resources and info on other upcoming projects. I'd like to remind everybody before we jump in, this video is for entertainment purposes only. It's not financial advice. Do your own research. Always have fun. All right, so let's jump in. Basically, this is another auto staking protocol. This already launched. This is about a month in. But the reason we're doing a review on this is because, one, the chart is nice, and they're a little bit more innovative than just simply, oh, we're going to give you 2.3% daily, rebasing, and that's it. So this seems to be a second project from a team that has done a tomb fork. You can find out more about that if you just Google tomb forks. Essentially, it's when you have three different coins. One's a stable coin, one's a native coin, and it kind of goes between there. But we won't talk about that right now. Let's dive into this. So basically, you get 2.3% daily. The rebases are every 15 minutes, so it prints money every 15 minutes. All right, but here's the thing. They have an option for you to lock up your tokens, unlike other auto stakers, where they simply, keep it in your wallet. They keep printing money, put those tokens in your wallet, and then hopefully you're constantly watching the chart and seeing that, if somebody starts dumping, you got to hurry up and start get rid of it. Not so much here, because I think that they have a good system of when the people lock up their tokens for 7 days, 14 days, they got all kinds of everything up to a year. They'll be able to get stablecoin back as a reward. So I'm going to show you that. So website, very nice, simple, quick, boom, boom, boom. Not too many pages. That's what I want to see, because there's a lot of websites out there that have so much info, and it's just like it's useless information. So we're going to go straight into the white paper, and I'm going to just go through the most important stuff. KYC, double checked it. They're good. They got their KYC, so that's a check mark. Audit, they did their audit. Nothing was found. I'm just going to show you real quick right here. It's on TechRate. The only thing is liquidity locking details are not provided by the team, but that's because this audit was done on April 22nd, and they launched after that. So they couldn't have given TechRate, the audit company, the information on that. So that's absolutely normal. There were no other negative, red lines that were found. So let's take a look at this. So they got an insurance fund, which is very similar to other auto stakers. There's a banking system, a quarterly bonuses. That's what I want to talk to you guys about. That's the reward system that every 3 months there's going to be 25% of the initial liquidity pool that's going to get unlocked. So I'm not sure how much they raised, but it seems like they raised about $500,000 in stablecoins. So if that's what they raised, then probably about 125,000 in stablecoins should get released in 3 months, and so on for every 3 months, and that's going to get distributed, as you can see here, 40% buyback and burn of Aalto. So they're going to release that. They're going to buy Aalto right away, and that should right away make the price go up. Okay, 40% distributed to stakers, so 40% of 125,000, assuming again that they raised $500,000. That's roughly about 50,000 or so that should get distributed there. 10% sent to the treasure trove, so that's their treasury. Okay, and then all the Aalto from that pairing is going to be burned. All right, so that's pretty straightforward. All this the treasure trove is just like all the other protocols, the treasury. You got the auto burn wallet, the auto liquidity. I don't need to go into that, because I think if you're familiar with all these auto stakers, this is pretty much acts the same way. But this is what's different on this one. Mystery feature 1, 2, and 3, they don't have anything in there. Bartering system is for people that have more than 5,000 stablecoin that they want to, put into the system. So you can read about that here, but also they have another protocol, which is the AIMS and A-Share. That's the one I was talking about. That's the tomb fork that they also run. So they have a way for you to buy into the Aalto protocol with the other tokens, but not all the time. So you got to read this carefully. This is just going to be a bonus if you can. All right, so yield generating NFTs. I've seen this on a ton of protocols. Usually what happens is they're starting to fail and they promise yield generating NFTs. They get some kind of breath of life, but I'm not saying that's what's going to happen here, but that's what's been happening to other protocols whenever they release the NFTs. Venture capitalist and angel investor package, that was for their pre-sale people, so that doesn't really affect you. The only thing I'll say here is anybody that did go through this, they're going to have their tokens vested based on what's inside here. Real world assets. So this is what matters, because at the end of the day, all these protocols are claiming that they're going to give you a lot more tokens. Again, tokens with every single rebase are worth less and less and less and less. The only thing that makes these protocols money is new investors, unless you can somehow take the treasury money and flip it. Okay, so let's look at what they are hoping to make money with and bring back in stablecoin. Aalto merchandise. I mean, realistically, I don't think there's going to be that many people buying merchandise overall, okay? So, crypto cloud mining. This is very, very low percentage per APY or per year. You're probably getting anywhere between 7 and 15% a year. You can get more, but again, think about that. Let's even say it's 30% a year. That's per year. You're doing 2.3% a day release of tokens. So you have to catch the one with the other. Validator nodes. Stablecoin validators produce probably between 10 to 12% a year. Again, per year. Cross-chain stable farms. This is a little bit riskier. You could probably make some money here. But, you know, we're not talking 100% per month, which is, 2% a day is probably about, I think, 35 days or 30 days. You're going to double. So think about that. They're promising almost 100% return in a month. Okay, DeFi yield protocols. In my opinion, I have seen this. A lot of protocols say, "Oh, we're going to just put your money into other high yield protocols." Okay, that's like, we're going to put it into our own protocol. I mean, you're already promising people 2.3%. So think about that. What's the chance of another protocol doing better? Unless you're trying to flip it, which is really, really high risk. I'm not saying you can't do it, but it's really high risk because you're hoping that 2x's, 3x's, and then you can take that money and put it back in your protocol. Incubator launchpad service. Great idea. Here's the problem. This takes time. So unless you already have this ready to go and roll out, you're not going to be producing that much stablecoin. Okay, it takes time to find the people that are going to want to use your launchpad service. You got Pink Sale to compete with. And it's a great idea, but you got to make sure that most of the tokens that your investors have in your protocol are locked up enough that you could make this, program it, market it, and then launch it. Okay? So this is not bad, but again, think about what are the difficulties that you're going to encounter when you're going to try to get stablecoin back in the protocol. Because if you don't get stablecoin back in the protocol, that chart's going right back down like a roller coaster. All right? I'm not trying to be negative. This is just what happens to these auto stakers that promise a lot of money back, okay? Or coins back, I shouldn't say money. All right, so we can go back, double check. Let's see if we missed anything. Yield generating NFTs we went through, real world assets we went through, tokenomics. Okay, so supply tokenomics. I'm not even going to go through that. It's pretty regular. There's nothing that really jumps out at me. Trading fee structure. I just want to say 13% for buys, 17% for sells. That's normal. You got the first 7 days, which we're past that. They had 25% sell fee. Again, that's normal. We'll go through the chart and see how that helped. Over here, let's see, roadmap, partners. Okay, so whitelist again. I don't like whitelist because I have seen that all it does is get people in cheap, and then they want to cash out, and then you're fighting that constant people want to cash out, but you got to get new people. So it's all going to be a matter of how much marketing are you going to do? How can you attract new people while you're fighting that whole battle of cash out versus new investors? All right. So look at the chart. Very, very, very nice. Don't worry about these. This is just a protocol issue that they fixed probably right after here. This is just like buybacks or something that was happening where it was dropping it but giving it right back to where it should be. So you could see crypto crashed around the 11th and it kind of stayed here. And then look, something happened, whether it was marketing or people got confidence and started investing, or something happened where it went 4x from here to where it is right now. So 372%. So what you have to look for is typically these auto stakers have two peaks and then it starts going down and fighting the trend. So if you consider this one peak, there's your one peak. And then when does this stop? Does it stop here? Does it keep going? Remember we reviewed LockPay Financial. Here's the thing about that versus this one. You can take all your money out of this if you didn't stake everything, okay? With LockPay, once you put that money in, that was gone. Not gone, but you're taking out 1%. That's it. That guy restricted it to 1%. And again, I think that's, I wouldn't say brilliant, but it's a good idea because you're just not going to be able to ruin the chart and have big sells. So you can see the protocol probably, it looks like bought right here for 3,000. It looks like another 3,000, another 3,000. So it looks like buybacks right here to add liquidity. So that's a good thing, okay? Good chart. And look, it's been 1 month. And that's good because in this environment, with this much, crypto fear around, this was a good thing. You don't see this very much in other charts. All right. So overall, I think what you have to decide here is what do you think is the percentage of people that have all their tokens locked up for 7, 14, 30 days? Over here, you can see in the white paper, I'm not even going to go into Twitter because it seems like they got their stuff straight. Looks like a good team. It's their second protocol, so they seem to know what they're doing. Let's see here if we can find where the lockup periods are, because I want to show you that real quick before the end. So quarterly bonus right here. So I'm sorry, that's not it. Okay, so maybe it's the banking system. All right, here we go. Lockup tiers, so 7, 14, 30, 60, 90, 180, and 365. I have been through the Discord. There's people in there that are staked for 7 days. There are people staked for 60. There's people that staked even for 365. So there is confidence in this protocol, and people are staked. And obviously this is almost like a lottery, you know what I mean? Like if it's still around in 365, hopefully the number's up and you're going to get a big payout. So, only lockups for 90 days are going to get that 3 months, tidal wave rebate, okay, which is that stable coin coming out of the liquidity pool. Keep that in mind. So, I'm sure there's probably quite a few people that are probably staked for 90 days, but also staked for 7 days. All right. So here's the explanation. Overall, I like the protocol, and if we look at this chart, it's all going to be how confident are you from here? Can we rise another 5x or whatnot from here? Seems like it's not going down right now. If you look at the volume down here, this is very important. Take a look on the left side. There's big volume at the start, and then it's kind of just like peters out, and then it's just very low, and then something happens where it just boom, right there explodes, and you could see these right here are a lot higher than everything here. So this is reminding me of Titano and Libero and SAFUU, where something hit. I mean, SAFUU was kind of from the start just a juggernaut. Titano was low, and then boom, in the middle of towards the end of December, of last year, it exploded. Of course, it's going down now because, they're having trouble keeping up. But again, they're 1 month in. If this is a healthy protocol, there's still a chance to get in, I think. But you got to be careful. And because of the staking, that should give you enough confidence that it's not going to go down like some of the other protocols right away. So invest at your own risk. If you guys want other info, please visit our website at defigator.xyz. Make sure to click on that Discord link. Join us in our Discord. Ask any questions. We'd love to give you our analysis and discuss any other protocols that you guys can throw at us. Thanks. We'll see you.